Hey guys, what's going on? This is your boy Christian Israel, and you are tuning in to the New Creation Podcast, Episode 4. Today is March 27, 2020, and we are diving into the Part 2 of Was This Digital Currency Planned? Yesterday was Episode 3. We dug into it a little bit. We introduced you to who Christine Lagarde of the IMF was and what she has to do with cryptocurrency and moving it forward and digital currency and everything that's moving on in the world. Today's episode is going to be a little bit different. I'm going to play for you her opening keynote at the Singapore Fintech Festival in November of 2018. The reason I'm going to focus on her is because she's the head of the IMF and she makes everything move. So, do you think America just popped this out of the blue and now we have a digital coin and a digital wallet with the Fed accounts? I'm going to tell you this has been planned for a long time. Yesterday we showed you videos from let you hear audio from 2016, 18, and 19, where she's saying cryptocurrencies were disruptive. Where here she is discussing, right, and pushing why cryptocurrency should be used, okay? So at the end, we're not going to discuss this. We will go into the facts of the day and some of the other things like the scripture, how I normally close. But today I'm just going to play for you her whole opening keynote at the Singapore Fintech Festival on November 20th, 2018, okay? And then in tomorrow's episode, part 3, we'll break this video down and bring you some more news, okay? Again, thank you guys for listening so much. Our podcast is now starting to spread around. We are now on Google Podcasts, Spotify, iTunes is about ready. We also got on a couple more, so just jump on the platform and you can see where we're at. You can also leave messages for us and let me know what you're thinking. I want to interact. I want to hear back from you. I'm starting to get some interaction on Twitter, and that our Twitter handle is @NewCreationCap. Hit me up. Let me know what you're thinking. Shoot me back some feedback. I would love to have a conversation with you, okay? So thank you for tuning in today. And remember, this is a new you, a new future, a new creation. Let's jump into the story of the day.
Good morning to all of you. It's a real pleasure to be here today. And I would like to thank the organizers. I can think of Ravi, I can think of the Singapore authorities at large for having us participate in your 3 days event. Did you notice that it was rainy this morning? A little bit. Singapore is also well known for its winds. It is often windy. Winds here bring about change and opportunity. Historically, winds generally blew ships to the port. These ships resupplied while waiting for the monsoon to pass, for the seasons to change. And as the Greek philosopher Heraclitus of Ephesus would have said, change is the only constant. Singapore knows this. You know this. It is the true spirit of the Fintech Festival, opening doors to the new digital future, hoisting sails to the winds of change. And yet, change often appears daunting, unsettling, destabilizing, disrupting. Especially true for technological change. They disrupt our habit, our emotions, our jobs, our social interaction, for better or for worse. The key is to harness the benefits while managing the risks. When it comes to fintech, Singapore has shown exceptional vision. Think of the regulatory sandbox where new ideas can be tested. Think of the Fintech Innovation Lab and its collaboration with major central banks on cross-border payments. So in this context, and in my position as head of the IMF, I would like to explore 3 particular areas. First, I want to frame the issue in terms of the changing nature of money and the fintech revolution. Second, I would like to evaluate the role of central banks in this new financial landscape, especially in relation to providing digital currency. And third, I would like to look at the downsides, the risks, if you will, and consider how they can be minimized. Let me begin with the big issue, the change of money. How is money changing? When commerce was local, centered around the town square, money in the form of token, shells to begin with, metal coins eventually, was sufficient, and it was efficient. The exchange of coins from one hand to another settled transactions. So long as the coins were valid, and that was determined by just glancing, inspecting, scratching, or sometimes biting into them, it did not matter which hand held them. But as commerce went maritime, on ships like those that passed through Singapore, and covered increasingly greater distance, carrying those coins became expensive, risky, cumbersome, heavy. So Chinese paper money, introduced in the 9th century, helped, but not quite enough. Innovation produced bills of exchange, pieces of paper allowing merchants with a bank account in their home city to draw money from a bank at their destination. The Arabs called these sak, abbreviation for sukuk, the origin of our word check today. And these checks and the banks that went along with them spread around the world, spearheaded by the Italian bankers and the merchants of the Renaissance. Other examples are the Chinese chanzi and the Indian hundi bills. And suddenly it mattered who you dealt with. Was this Venetian or Persian merchant the rightful owner of that bill? Was the bill trustworthy? Was that chanzi bank going to accept it? Trust became essential. And the state became the guarantor of that trust by offering liquidity, backstop, and supervision. Why do I take you through a little bit of history background? Well, because the Fintech revolution questions the two forms of money that we just discussed, coins and commercial bank deposit. And it questions the role of the state in providing money. We are at a historic turning point. You, young or not so young, doesn't matter, but bold entrepreneurs gathered here today, you are not just inventing new services, you are reinventing the history of money. You're drawing a completely new future, actually. And we are all in the process of adapting. A new wind is blowing, and it is that of digitalization. And in this new world, we meet anywhere, anytime, as they said. And surprise, surprise, the town square is back. Back on your smartphone. We exchange information, services, even emojis, instantly, peer-to-peer, person-to-person. We float through a world of information where data is the new gold, despite growing concerns about privacy, about cyber attacks. A world in which millennials are reinventing how our economy works, phone in hand. And this is key. Money itself is changing. We expect it to become more convenient, more user-friendly, perhaps even less serious-looking. We expect it to be integrated with social media, readily available for online and person-to-person use, including micropayments. And of course, we expect it to be cheap, safe, protected against criminals and prying eyes. So, what role will remain for cash in this digital world? There are already signs in some shop windows. Cash not accepted. And it's not just in Scandinavia, the poster child of a cashless world. In various other countries too, demand for cash is decreasing as is shown in our IMF work. And in 10, 20, 30 years' time, who will still be exchanging those pieces of paper called checks? Bank deposit, too, is feeling the pressure from new forms of money. Think of the new specialized payment providers that offer e-money. From Alipay to WeChat in China, to Paytm in India, to M-Pesa in Kenya. These forms of money are designed with the digital economy in mind. They respond to what people demand and what the economy requires. Even cryptocurrencies such as Bitcoin, Ethereum, and Ripple are vying for a spot in the cashless world, constantly reinventing themselves in the hope of offering more stable value and quicker and cheaper settlement. Let me now turn to my second issue. What is the role of the state? What is the role of a central bank in that new monetary landscape? Some suggest that the state should back off, should back down. Providers of e-money argue that they are less risky than banks because they do not lend money. Instead, they hold client funds in custodian accounts and simply settle payments within the network. For their part, cryptocurrencies seek to anchor trust in technology. And as long as they are transparent and you are techie savvy, you might trust their services. Still, I'm not entirely convinced. Proper regulation of these entities will remain a pillar of trust. Now, should we go further? Beyond regulation, should the state remain an active player in the market for money? Should it fill the void left by the retreat of cash? Let me be more specific. Should central banks issue a new digital form of money? A state-backed token, or perhaps an account held directly at the central bank and available to people and firms for retail payments, to each of you. True, your deposits in commercial banks are already digital, but a digital currency would be a liability of the state, like cash today, not of a private firm, the central bank, the state. And this is not science fiction. There are central banks around the world that are considering this option. In countries like Canada, like China, like Sweden, like Uruguay. And they are embracing change and new thinking, as indeed we are at the IMF. Today, we are releasing a new paper which I was supposed to flag for you. So imagine there is a paper in my hand, except that it's available online. And it's called I actually don't have the name of the paper. That's very interesting. But it's all about the pros and cons of central bank digital currencies, also called CBDC, if you want to sound really aware. So check on that paper, really interesting. And I believe that we should consider the possibility to issue digital currency. There is a role for the state to supply money to the digital economy, to satisfy public policy goals that you are familiar with, such as inclusion, security and consumer protection, to provide what the private sector cannot provide, and also privacy in payment. Let me start with financial inclusion, where digital currency offers great promise through its ability to reach people and businesses in remote and marginalized regions. We know that banks are not exactly rushing to serve poor or rural areas. And this is critical because cash might no longer be an option here. If the majority of people adopt digital forms of money, the infrastructure for cash would deteriorate, leaving those in the periphery behind. What about subsidizing cash usage in those areas? Well, that means that economic life in the periphery would become disconnected from the center. Not very satisfactory solution either. Now, of course, offering a digital currency is not necessarily the only answer. There may be scope for government to encourage private sector solutions as well, by providing funding or improving infrastructure. The second benefit of digital currency relates to security and consumer protection. And this is really a David versus Goliath argument. In the old days, coins and paper notes may have checked the dominant position of the large global payment firms, banks, clearinghouses, and network operators, simply by offering a low-cost and widely available alternative. Without cash, too much power would fall into the hands of a small number of outsized private payment providers. Payments, after all, naturally lean towards monopolies. The more people you serve, the cheaper and the more useful the service. We are seeing it in many countries already. For a start, private firms may underinvest in security to the extent that they do not measure the full cost to society of a payment failure. Resilience may also suffer. With only a few links in the payment chains, the system may stop working if any of the link actually is deteriorating, if there is a glitch, a bankruptcy, or a firm withdrawals from the market. Now you will say what the state does well is regulate, but regulation simply might not be able to fully redress these downsides. A digital currency could offer advantages as a backstop means of payment, and it could boost competition by offering a low-cost and efficient alternative, as did its grandfather, the old reliable paper note. Let me touch on the third benefit now of digital currency, and I would like to highlight the privacy domain. Cash, of course, allows for anonymous payments. We reach for cash to protect our privacy, our identity for legitimate reasons, to avoid exposure to hacking and customer profiling, for instance. Let's take just an example. Imagine yourself purchasing, frozen pizza and beer. Ooh. Now, surprisingly, consumers of frozen pizzas and beer, in my example, are associated with higher mortgage default than those who actually consume organic broccoli and exquisite wine. What can you do if you're really craving for pizza and beer and yet you do not want your credit score to drop? You're not going to go for broccoli. You will pull out cash. And tomorrow? Would a privately owned payment system push you to the broccoli side? Would central banks jump to the rescue and offer a fully anonymous digital currency? Certainly not, because that would be a bonanza, not for broccolis, but for criminals. And that brings me to my third area. I'll come back to the pizza later. The potential downsides of digital currency. The obvious ones are risks to financial integrity and financial stability. But I would also like to highlight risks to stifling innovation, risk of stifling innovation, which is obviously the last thing that we want. My main point will be that we should face these risks creatively. How might we alleviate them by designing digital currency in new and innovative ways? And I think that technology has actually the response to that. But let's return to the trade-off between privacy and financial integrity. Can we find the middle ground? Now, central banks might design digital currencies so that users' identities would be authenticated through customer due diligence procedures and transactions recorded. But the identities would not be disclosed to either third parties or governments unless it was so required by law. So when I purchase my pizza and my beer, the supermarket's bank, their marketers would not know who I am. The state might not either, at least by default. But anti-money laundering and terrorist financing controls would nevertheless run in the background. And if a suspicion arose, it would be possible to lift the veil of anonymity and to investigate. This setup would be good for users, bad for criminals, better for the state relative to cash, and of course, challenges remain. But my goal at this point is that we should not give up and we should explore those options and see whether they can be made to work. The second risk relates to financial stability. Digital currencies could exacerbate the pressure on bank deposits we discussed earlier. If digital currencies are sufficiently similar to commercial bank deposits because they are very safe, can be held without limit, allow for payments of any amount, perhaps even offer interest, then why hold a bank account at all? But banks are not going to be passive bystanders. They can compete with higher interest rates and better services. What about the risk of bank runs? It exists. But consider that people run when they believe that cash withdrawals are honored on a first-come, first-served basis. The early birds get the worms. Digital currency instead, because it can be distributed much more easily and faster than cash, could reassure even the person who's left lying on the couch, eating pizza. In addition, if depositors are running to foreign assets, they will also shun the digital currency. And in many countries, there are already liquid and safe assets to run towards anyway. Think of mutual funds that only hold government bonds, for instance. So the jury is still out on whether digital currencies would really upset financial stability. And again, we need to continue to explore. Let me come to the third risk. If digital currency became too popular, it might ironically stifle innovation. Where is your role? Where is your role if the central bank offers a full-service solution? From digital wallet to token to back-end settlement services. What if instead central banks entered a partnership with the private sector, with some of you? Banks or other institutions, and said, you interface with the customer, that's what you do best. You store their wealth, you offer interest, advice, loans. But when it comes time to transact, we take over. How would this look like? Let's go back to our pizza. Hopefully by then it's still warm. When you buy it, at the click of a button, your bank transfers funds to digital currency held at the central bank. In turn, the central bank immediately forwards it to the supermarket's bank, which would credit the supermarket's accounts. All of that in a split of a second. All nearly for free and any time. Do you see what just happened? The central bank is now the trusted intermediary. The advantage is clear. Your payment would be immediate, safe, cheap, and semi-anonymous, as you wanted. Meanwhile, your bank or fellow entrepreneurs would have ensured a friendly user experience based on the latest technologies. Putting it another way, the central bank focuses on its comparative advantage, back-end settlement, and financial institutions and startups are free to focus on what they do best: client interface, innovation, providing new services. This is a public-private partnership at its best. So let me conclude here. I have tried to evaluate the case this morning for digital currency. The case is based on new and evolving requirements for money, as well as essential public policy objectives. My message is that while the case for digital currency is not universal, we should investigate it further, seriously, carefully, and creatively. More fundamentally, the case is about change, being open to change, embracing it, shaping it. Technology will change us. So we should change as well. Lest we remain the last leaf on a dead branch, the others having decided to fly with the wind. In the world of fintech, we need to harness change so it is fair, it is safe, it is efficient, it is dynamic, it is inclusive. That was actually the goal of the Bali Fintech agenda that we launched in Bali at the time of the annual meeting of the IMF and the World Bank last October. When the winds of change pick up, what will guide us towards progress in that journey? Will it be the North Star as the captains followed in the Strait of Singapore, Malacca? And today and tomorrow, who will guide us? Let me suggest that we follow a girl, a young girl, a fearless girl. If you're lucky, you might even be able to meet her in person in New York's financial district. She's bold, she's brave, she's confident. She faces forward towards the future with grit and determination. A future she herself is going to shape, with eyes wide open, eagerly, steadily. And she says to us, sail ahead. I'm not afraid. That's the challenge that we have. Thank you.
All right, guys, so what do you think? That was Christine Lagarde's opening keynote there at the Fintech. We're not going to break down that audio and that speech at that conference today, but tomorrow we are going to break it down more and more. I just want to give you guys a second to go back and analyze that and compare it to what we heard in yesterday's podcast, and her tone is a little different. I want you to see that this may have been, in my opinion, I believe it was planned, right? But this is a news section I want you guys to see, and so I'm going to walk you through how it all came together, how it's all been in the works since 2008. So this podcast, I really want to focus on moving forward, right? That we are in the fourth industrial revolution, and that when I keep saying a new you, a new future, a new creation, yes, I have biblical principles to that concept, but also a worldly concept as well, that when the banking system moves, it's going to change who you are. Not inside, but how you move, because if the future is here, and it's a new creation of digital money, of digital currency, and a digital wave. You know, the internet was the beginning of it, the emails moving forward to web. Everything eventually moves or it gets lost. Look at Blockbuster. They thought they weren't going anywhere, and now we got Netflix and Amazon and Hulu and Disney Plus and YouTube TV. Everything's online, right? So why not digital currency? So this is a planned thing, and are they using COVID-19 as a way to move it? Because we've had a lot larger epidemics in our world, and we're actually handling this pretty well as far as deaths cases are concerned. But the fact of the day, which is a concerning thing for America, right? There's one senator, I'll find the clip tomorrow, that said, never let a crisis go to waste. And right now, yes, this is a disease that moves human to human. but is it really worth what is happening? You know, there's always a couple casualties in a war, and we are in some type of war. What kind of war, I don't know. But the fact that today in NBC News that we saw this morning, more than 3 million Americans filed for unemployment claims last week alone. Last week. And that's just concerning because, yes, I'm very excited about the future because as an investor, I believe I called, as well as a lot of the other rest of the XRP community and those in the cryptocurrency community, Bitcoin, you know, Gold 2.0 and XRP, what's going to move the liquidity, and then the Ethereum platform, which all this stuff will be like, where all these other tokens will be held and moved, right? But at the same time, when change happens, people get hurt. And in California alone, we're seeing jobless claims of more than 100,000 a day. And I told you that my own stepfather got laid off from his factory. You know, I be it not permanently, but until they open. But we don't know what that looks like, okay? So I know there's a lot of people out there struggling right now to put food on their tables all of a sudden, to know when the next paycheck is. And yet we have a stimulus bill where all the Americans going to get $1,200 a month. But a lot of places, I used to live in Los Angeles, I've lived in California, in Chicago, and at some point in time, $1,200 wouldn't even pay my rent. So I hope you guys are doing well. I do pray for you guys every single day because, again, this is a newscast show, and I try to keep the politics out of it and just give you the facts. And the facts are right now is that if you're listening, this is a good chance you don't know what tomorrow brings. If you're listening, this is a good chance that you might be struggling. There's a good chance that you don't know if you work for someone else, if you'll go back to that job. For those of you who are entrepreneurs like myself, take the advantage of the knowledge that you not only get through this podcast, but that's online right now. Look it up. Look things up. Google XRP, Google Ripple, Google cryptocurrency, Google digital currencies. That's what got me started. I was listening to the blockchain backer, listening to the bearable bull, listening to the Moon Lambo. I listen and watch people trade like the Kirby Trading Channel. I listen to my Orcas group on Telegram. You got the Crypto Zombie. Let's see, and just anybody, go on YouTube. There's a wealth of information right now. Crypto Jeb, shout out to you too, man. You're a TA guy. But I look for the fundamentals in the TA. What's the utility in the thing? And I started becoming a big fan and believer in Ripple, so I started Googling and digging into XRP, and that's how we came to this channel. That's how we started. That's what my business model is going to be based off, the blockchain with cryptocurrencies and the stock market. That is the future for me. This is 1996 in the internet, and I'm trying to jump on board and just let you guys hit. But as I always close out, I just want to thank you guys because this is new, but you still listen to it. You take the time to listen to somebody randomly in his bedroom talking to you and just giving you information. I appreciate you. As I said before, we are now in different levels as far as podcasts are concerned. We're on Google Podcasts. iTunes is in the process of being approved. We're on Spotify. We're here on Anchor and some other places. So just share this podcast, like this podcast, subscribe to this podcast, and just thank you so much for helping me out. As well as hit me up on Twitter at NewCreationCap, C-A-P, and have a conversation with me. I know we got some people starting to hit up the XRP community. Shout out to you guys. You guys are starting to follow me. Shout out to all the people I'm sending to, my brother, my girlfriend, my parents, and I'm flooding you with these things. So thank you guys for your support. I really appreciate it. As always, I like to finish with scripture, followed by a small sermon from Pastor Stephen Furtick. So today's scripture for you guys is going to be from Psalms 46, verses 1 to 12, or 2 to 12. And here's how it goes. God is our refuge and strength and ever-present help in trouble. Therefore we will not fear, though the earth change, though the mountains topple into the heart of the seas, though its waters roar and foam, though the mountains quake at their swelling. Selah. There is a river whose streams make glad the city of God, the holy dwelling place of Elyon. God is in the midst of her, she will not be shaken. God will help her when morning dawns. Nations are in an uproar, kingdoms totter. He utters his voice, the earth melts. Adonai Tazavat is with us. The God of Jacob is our stronghold. Selah. Come, see the works of Adonai, who brings devastations on the earth. He makes wars cease to the end of the earth. He breaks the bow and shatters the spear. He burns chariots with fire. Be still and know that I am God. I am exalted among the nations. I am exalted in the earth. Adonai Tazuvat is with us. The God of Jacob is our strong tower. Selah. The big thing to take out of there is Psalms 46:11. Be still and know that I am God, he says. That he will be exalted among the nations. That he will be exalted in the earth. Just relax, guys. He's got this. Put your faith in the Lord, and he will take care of you. He doesn't say it's going to be perfect, and Lord knows it's not easy to be a Christian. But put your faith in the Lord, and he's got this. Just be still. Again, thank you guys for listening so much. I appreciate it. I appreciate you. Please subscribe to the podcast again. And please, God bless you. May God keep you. May God's grace shine over you. Again, this is the Christian Israel with the New Creation Podcast. A new you, a new feature, a new creation. Thanks, guys. Peace and love. I'm out of here.
He's stuck in a broken system. So are some of us. He's stuck in a bad story. And so are some of us. We've inserted verses that aren't even there to explain why we are the way we are. We think it's our job to suffer. You know, suffering for Christ and for the good of others is one thing, and sacrifice is. But to suffer the shame that he already took away from you is to snatch back what he nailed to the cross. It is not your job to suffer like that. That's a broken system. I'm telling you, men and women of the Most High God, religion is a broken system. That's why Jesus went for one, to show you this is a relationship. I want to deal with you one-on-one. I want to speak to you like a person, not like you're some kind of project, not like you're some kind of defect.